Hello traders, good day to you all. This is Christopher Glen, and this is the daily market review for the current market status. Today it is the end of the month, the 30th of April 2014, and we've received several announcements this morning as I was expecting. Wednesday, a very liquidized trading day. The New Zealand is bouncing backward and forward, the euro as well. We've received a good announcement regarding the ADP non-farm employment change in the United States, but not long after that, we've received bad announcement regarding the GDP. So we can say that the dollar gained strength as an outcome of this announcement, and then eventually it lost a lot of strength in the market. We can see the image through the dollar index, and we will um, analyze the dollar index. As I want to remind you, I was expecting to see weaker dollar in the market, and I was predicting that we will see a divergence on that chart. Later on, we've got an announcement from the FOMC, the FOMC statement, and then Bank of Canada will reveal its uh, observation. Canadian dollar, US dollar are expected to affect the market later on this trading session. And as you can see, we had a variety of announcements. Let's see what was the effect on the chart and where we've got a good probability of trade. So first of all, let's go to the dollar index. We can see that indeed at the beginning, when we had a good announcement on behalf of the dollar, we've received an uptrend, but not long after that, we've received a long and strong liquidized downtrend weakness on behalf of the dollar, expressing the announcement of the this announcement, the GDP. And I told you that on a weekly chart, I can see an expectation of a downtrend regarding the US dollar approximately toward the 78 rate, and therefore there's a very long potential for a downtrend movement over here. And again, we've got the FOMC expression that might add an additional weakness on behalf of the dollar. I want to talk about the potential in terms of analyzing structure. When I'm analyzing a structure, on a weekly chart, I'm analyzing structure that is beyond any announcement. If today the FOMC meeting will reveal strength, will express strength on behalf of the dollar, that doesn't mean that the analysis itself is wrong, just meaning that along the way we will have another bounce. Generally, the market is ready to receive weaker dollar in the markets, and that is the expression that I'm expecting to see according to the Elite Wave analysis. On a daily chart, we can see that we've completed an impulse movement, an A. Potential ABC has already completed, but we might even see an A, a B, and a C. Therefore, I'm staying aside regarding the decision about the dollar index for the next several days, because at the moment the market can drop down significantly or bounce a bit higher. Both structures are acceptable. Again, on a weekly chart, the potential is down, but the daily chart is revealing potential for both directions. Therefore, I won't take a statement regarding the current condition or the next several days condition. Another very, very important structure we can look at the FTSE. The FTSE on a 15-minute chart is showing a potential of an uptrend. But on a weekly chart, even let's go to daily chart, it'll be easier for us to look at that structure. We can see that we had a 1, a 2, a 3, a 4, and a 5 waves of downtrend movement. And since then we had an A, a B, and a C. Now, even if I'm dropping down and counting the inner structure of the waves, again, we've got a 1, a 2, a 3, a 4, and a 5. And we've got an A, B, C of A. We've got an A, B, C of B. And since then, we've received a 1, a 2, a 3, a 4, and a 5. That is the completion of C, meaning that the expectation from the FTSE is to collapse down. No question about it in terms of the elite wave analysis. Collapse down from 6775, 6, let's say 6778 until 645. It's a logical downtrend movement, approximately 400 points. It's a very nice downtrend to catch. And beside that, I'd like to talk about the gold. At the moment, because the assumption regarding the dollar is a weaker dollar in the market, I was moving forward to the gold to look for potential of an uptrend, stronger gold in the market. As we know, it's expressing a weaker dollar in the market, just going along together. We can see an impulse movement climbing higher. We can see a sideway A, B, and C structure completing a corrective pattern approximately at the fourth wave of a pullback. It's logical to see an uptrend on the gold. If you'd like to be a bit more careful with your decision, you can place a trend line on top of this entire corrective pattern, waiting for the market to cross that. Obviously, that's an enormous length. It's an enormous path that we'll need to cross until we'll cross the trend line. I think that it's logical to already participate in a call option over here, not only because of this completion of a corrective pattern, but also because we've got a very nice support and resistance line along this area. Very nice support and resistance line, and just as this structure, when we've crossed it significantly and then pulled back and retested the support and resistance line and then bounced lower, this cross over here and then another pullback A, B, C, basing its structure along the support and resistance line, and the potential is up, no question about it. Now, I love this structure because this uptrend potential, on one hand, it has very long potential of an uptrend, approximately till 1315, $1,315 for an ounce, on one hand, and on the other hand, we're already bouncing on the support and resistance line. So a break beyond the support and resistance line will cause me to close the position with a very small amount of loss and not waiting for some miracle to change the course of the chart like most traders are doing. From here, I'd like to wish you all the best with your trades. Have a pleasant month. That's beginning of May, and I hope that I'll be able to assist you with more good trades along the month. I'd like to wish you all the best. Christopher Glen, have a pleasant day, and bye-bye.